Okay, we mentioned pretty quiet start to the trading day. Right now we're looking at the TSX with a marginal 9-point advance. I said it before, I'll say it again. We got one main story today, and it's coming out of Washington, that decision on interest rates from the U.S. Federal Reserve. It's not going to be an easy one, and the market reaction could be complicated. Let's bring in David Burrows, who's president and chief investment strategist at Barometer Capital Management. Talk a little bit about that and talk about where we're going from here.
Yeah.
Everybody says this is not going to be an easy decision for the Fed. How are you thinking about this?
It's a tough one, given what happened in the regional banks over the last couple of weeks. I think it's almost a 0% possibility you get a 50 basis point hike.
Which was where the market's thinking was when Jay Powell was testifying on Washington, literally, I feel, a couple of days before the collapse of Silicon Valley Bank.
Showing his inner hawkishness.
Right.
I think it's also a very low probability you get a 0% cut, 0% rate hike.
Because?
Because I think that there's still some messaging beyond what's happened in, those few regional banks. I think that he needs to probably go 25. But the verbiage will be what's important. And I think that likely he comes in and is a little bit dovish. It's going to be hard for him. A little bit dovish with a 25 basis point cut. Hike. That probably is the most likely outcome.
And where do you think the broader economy is headed? Because that's the tough part. Like, one day people are watching, we're reporting on bank turmoil. We keep highlighting that there's just not enough evidence that we're free and clear of inflation problems.
Right.
And you'll hear people talk about contractions or recessions or even delayed downturns, as one of our guests earlier, who actually has influence at the NBER, which officially calls U.S. recessions, who said there's enough evidence on the table that we're not quite there yet.
Yeah.
And then people get worried, well, maybe that's just been delayed by, what's been going on. So what do you think the economic road ahead looks like?
Well, you have to remember that the U.S. is a very balanced economy with lots of different inputs. The specific problems around the regional banks, for the most part, were California-based, tech-related, and we've been through a terrible bear market in tech over the last 18 months, especially in the earlier stage companies. So that big impact on Silicon Valley Bancorp. But employment is pretty resilient, and inflation is there. It's coming down. Housing market's okay. So, I think that realistically, there are parts of the market and certain secular themes that actually are very resilient. They held on way longer in the bear market before they sold off, and they rallied very nicely off the lows in October. And those are the places that we have to focus.
Okay, let's dive into that, because people like hearing about your views on investing. Last time when we were talking about U.S. names, like you used J.P. Morgan as an example, which, who knows, J.P. Morgan may emerge from this whole thing stronger than ever. But I know there's other areas that people have been talking a lot about. Gold would be one of them. So given this complicated environment, all of a sudden, bullion prices get back up to around $2,000, right?
Yeah.
How do you feel about the outlook from here, and how does that influence the kinds of stocks you might be looking at?
Well, I think the backdrop is we're in a reflationary environment, and inflation has been kind of sticky. You've had a Fed and other central banks trying to tamp things down with a hike cycle, and it's been the fastest, most rapid hike cycle in history. But it's been pretty resilient. I think the central banks showed their colors in the issue with Silicon Valley Bancorp and SBNY, because they very quickly reversed course and expanded their balance sheet. So there seems to be muscle memory in the central banks in willingness to expand their balance sheets. And one of the reasons that people want to own gold is it's a finite quantity, and there are other things that have finite quality. Even, crypto has acted quite well over this last little bit.
Yeah.
And I think that the market is sniffing at least a pause in the rate cycle, and that would be good for gold.
Do you like buying products that are tied directly to gold, or do you look at gold stocks?
Well, we do own some gold shares. We've talked a lot about copper and nickel and so on in the last few visits.
Yeah.
But I think that there are some really interesting growth-oriented producers like an Alamos Gold, which has virtually all of its production in North America, 87% of net asset values in Canada, no debt, a growth profile going from 500,000 ounces to 800,000 ounces. It's an area that's been out of favor for a long time, but I think it's quite interesting given the structural backdrop we have today.
Okay, I'm looking at some of your top ideas today. I see NVIDIA on there. That's interesting because sometimes you're cautious on tech,
Yep.
but the AI boom has resulted in, I'd have to go check, but last time I checked, I think this is arguably the best performing stock in the S&P this year.
Yeah, well, look, so first of all, semiconductors are the most cyclical part of technology, right? Demand goes up tomorrow, pricing is firm, product goes out the door. We went through a mini glut in semiconductors coming out of the pandemic because of the supply chain, people double ordered, and we're really through that. But they are in the sweet spot for cloud-based data centers, and the data centers need to continue to buy GPUs. This acceleration in AI is going to create lots of demand, and NVIDIA has been developing software overlays for their chips for 10 years now, and these software overlays are now becoming a source of revenue, especially for the AI developers.
Okay, going through the list, continuing here, I see ATS automation. Why?
Look, we are into a period where we're going to have many years of reshoring of manufacturing. We got to do it in a productive way, in an efficient way. ATS has a great vertical into EV. And so we think that automation is going to be an important theme, and they've got lots of new contracts beyond their traditional sort of consumer and healthcare markets. EV could be a really interesting one. And again, it's a structural theme. There's a tailwind there. If we're going to have reshoring, and we're going to have EV uptick, this is one that can benefit.
Now, before I let you go, and we're taking a look at ATS, I realize that you're coming to the table with some new ideas. You have other convictions and other ideas that you've talked with us in the past. I do have to talk about energy because there was so much bullishness coming into this year. And look, there's all sorts of factors that go into it. But what would you say to energy investors who are trying to figure out the daily swings right now?
So energy has been very tricky. Okay, remember that a very high percentage of the trading over the last few months has been active hedge fund-oriented investors. And there is a body of folks out there who believe we could have a hard landing. And if you're going to bet against something that would be impacted by a hard landing, oil is one of those things. So there's been a tremendous amount of short selling in the futures market in oil. There are lots of cross currents, and that makes it very difficult. It'll be interesting to see how it acts over the next little while. I think oil a little bit more interesting, and long life oil even more interesting, like a CNQ. But definitely that was a tricky part over the last 2 weeks as the market reacted to what was going on in the regional banks.